Before we go into the problems, I just want to stress one concept. So when you learn about the pro rata distributions, you saw that in a pro rata distribution, the partnership never has gain or loss. However, in a disproportionate distribution, that is not the case. You're about to see in the problems that the partnership many times does have to recognize gain or loss. You're going to see specifically gain. So keep that in mind. A disproportionate distribution, the partnership can indeed recognize gain. I know that you learn in pro rata, never the case, but for disproportionate, it can happen. So I have my B outfit, and here's my B stinger, and I like to think of this, when we talk about S corporations, the S corporations have what we call the sting tax, which if you take a S corporation tax class, you'll learn about that. It has to do with built-in gains, passive income, LIFO recapture, different types of special taxes where an S corporation actually does have to pay tax, because you've learned that S corporations don't actually pay tax. It flows through to the owners like a partnership. Well, this is a case where the partnership can be subject to having gain. I mean, it's going to flow out to the owners, but they get stung because the normal rule, as we learned in the pro rata distributions, is no gain or loss on distributions to the partnership. But for disproportionate, that's not the case. You can have gain or loss. So keep that in mind, especially when you see that in the problem, when you go through the steps for disproportionate distributions, that we do indeed have, it's common for the partnership to have gain or loss in disproportionate distributions. All right, so now let's go into those problems. Let's make sure we understand those steps, and it's very, very important for these disproportionate distributions to focus on those steps.